Welcome to your week ahead for financial markets. It's Mike Smith, Head of Client Education and Training and Senior Analyst at Go Markets here to lead you around what may move market sentiment over the next 5 trading days. As we've reported before, we are in the midst of US earnings season. We have exceptional company reports coming across the wire, still over 77% of the S&P 500 who have reported so far are beating EPS and 63% are beating revenue expectations, despite a couple of tech earnings during the week which wobbled markets a little bit. We still have a positive earnings season which is holding markets up and justifying valuations near record highs. Of course, continuing to be an issue is the Trump tariffs. They're on, they're off, they're on again, and really markets are looking to who is potentially next in the crosshairs. We've obviously had Canada and Mexico having a 30-day extension before tariffs are imposed, and a tariff imposed on China. Most of the chatter this week from Trump has been aimed at the Eurozone, so it'll be interesting to see whether there's any more narrative around that. Of course, one of the big stories of the week is going to be the US CPI. At this stage, markets are priced in that there won't be a rate cut from the Federal Reserve until May at the earliest. Much of this has to do with the potential inflationary impact of the Trump tariffs, which were referenced in the last Fed minutes. And so it'll be interesting to see if that CPI number on Wednesday alters that thinking at all. In the commodity space, there's been some very interesting price action over the last week. We are seeing oil continue to look bearish and could test long-term support this week. If we look at a chart quickly, you can see here we've really been in downtrend since the early part of January and tested this $70 level during the course of last week. The line in the sand to keep an eye on in terms of a major change in sentiment is this $67. We could see it drift down through the week towards that level, but it would have to be a fairly significant drop off to test that right here, right now. But in the long term, it still looks as though it's more likely to go to the downside than push up. If we look at the weekly charts for context, you can see this level is important, not only in the recent past, also we can go back to November last year and, of course, January through to April last year when we tested multiple times. We are below the 200 MA, we are looking bearish, and it wouldn't surprise us to see that tested in the not too distant future. The other major commodity move is in the opposite direction, and gold keeps on seeing the buyers coming in with a vengeance. We saw 2,800 passed with ease during the week, and we're now eyeing 2,900. Again, if we look at a chart, so we can see here we had a slight pause there on Thursday, but a retest of this all-time high at 28.71 didn't manage to close beneath it, but we did get an intraday high of 28.86, so only $14 away from 29,800. There seems no sign of gold slowing down at this stage. You can see from that chart we've been in a steep uptrend really since the beginning of the year. All the signs point to potentially a test of 2,900 during the course of the week, even as early as Monday or Tuesday. And certainly that CPI on Wednesday, which has US dollar moving capabilities, may be the thing that pushes it through 2,900. So lots to keep an eye on this week, of course. I hope that gives you some guidance in terms of what to have a look at. And of course, please feel free to pop in to our lunchtime sessions live, where we update markets on a daily basis, look at charts as they're happening. And of course, the Inner Circle education session on Wednesday evening. It'd be great to see you there if you can make it along to those sessions at any time. Trade safe and see you again soon. Bye bye for now.